we go. Good afternoon. My name is Lisa Smith, and I'm the Executive Director of the Washington State Micro Enterprise Association. And today we're very fortunate to have several speakers that are going to be presenting about the tax structure work group that is working to increase participation of businesses into conversations around revising our tax policy and what work has gone into making it better, fairer, and more effective. I know that we have experts in the room, and I want to make sure you all have an opportunity to hear from them. We have a small group, which is going to enable us to have good conversation. And I want to just begin by saying thank you to Pauline. You've been wonderful in engaging us. I know this has been a long, hard road with the legislature. I know that both aisles of the legislature have been involved, both houses have been involved, and I just appreciate all the work that you've done to get us to this place. So without further ado, I'm going to hand it over to Vivian.
Thank you so much, Lisa, for that introduction. I'm going to share my screen, so just give me one moment so that we can get started.
I guess, and I'm wondering, just while we're in the room, if we have so few people, I'm wondering if we could just do introductions so you have a better sense of who's in the room. Would that be possible?
I think if we do very quick introductions of
sure.
Name, and if there's pronouns we should be aware of, I think that would work.
Wonderful.
I want to make sure we allow for as much time as possible for that discussion you mentioned.
Totally. Rodney, will you go first?
Sure. My name's Rodney Proctor. I'm a small business owner. I'm an environmental health and safety consultant, have my own little firm, and I have gotten to know Lisa over the last year, and she's one of my heroes.
Thank you, Rodney.
And I've worked closely with Rodney with the Black-Owned Business Excellence Group, which has been phenomenal. How about you, Morgan?
Well, thanks for Lisa, but I'm actually part of the
good.
The tax structure work group consulting team. So you'll hear me later if there are questions, but so I'll let other folks go ahead.
So Brandy, and then Dovey, and then Maddie. Okay, great. Brandon is the staff planner at the Cowlitz-Wahkiakum Council of Governments. Thank you. Welcome. And is it Dovey or Dovey? I'm sorry.
No, you had it right the first time. It's Dovey. I'm the grants director at SWEDA in Southeast Washington, kind of filling in for Don Smith.
Great. And Don does excellent work down in Southeast Washington. I know you're in touch with many, many businesses, so thank you. And then Maddie.
Hi, I'm the Community Development and Policy Manager at Business Impact Northwest.
Excellent. Welcome. All right, Vivian, thank you for your patience.
Oh, it's a pleasure to meet all of you, and I'm glad we have a small enough group that we actually can engage with one another a little more closely. So without further ado, I'm going to share my screen. And so I just want to welcome all of you and say that this is going to be an interactive session. And we really are going to be exploring your feedback about options for the future of Washington State's taxes, as Lisa mentioned in her introduction. And I think it's really important here to note that the tax structure has not really changed in 80 years in Washington State. And at the same time, within that time, our economy and our state has changed dramatically. And so the legislature determined that it was time to take another look at what could be updated or changed. And so you actually started to get to meet some of our partners who are joining me here today. My name is Vivian Ericson, and I'm going to be your facilitator today. And I'm here on behalf of the Tax Structure Work Group, and also joined by a number of experts, including folks from the Department of Revenue and as well as ECHO Northwest. And I'm just going to pause here so that they can also introduce themselves. And we can start with Morgan.
Okay, since you already heard from me. So I'm Morgan Shook with Echo Northwest. We're an economics consulting firm, and we've been working with the tax structure work group over the last year and a half to kind of bring these ideas forward today. I'm joined with a couple colleagues, I'll call them colleagues, at the Department of Revenue, Braden Fraser and Don Gutman, who are here, and they can say a word about themselves, but they're here to answer any questions you have on some of the very specific sort of tax issues if they arise.
I'll go first. My name is Don Gutman. I'm a program manager with the Research and Fiscal Analysis Division at the Department of Revenue. We are made up of a bunch of economists, statisticians, and we are doing the modeling of the various tax proposals that are being looked at by the tax structure work group. Thank you.
Thanks, Don. My name is Braden Fraser. I'm also with the Department of Revenue. I am in the Legislation and Policy Division, and our division is mostly made up of attorneys and people who have been with the department for a while and know the ins and outs of some of the various divisions. And so our group focuses on the legislation side, more of the words. And as far as the tax structure work group goes, we're looking at a lot of the constitutional issues and the structural issues and things of that nature. So thank you.
Thank you for those introductions. And so after those introductions, I kind of want to just touch base. Lisa mentioned this as well, but why are we here today? A lot of this is really all about you. We want to hear your values, your interests, and your preferences when it comes to both personal taxes and business taxes. And when we enter this space, there's no requirement to be a tax expert. We're really specifically looking for feedback from people around Washington. And this is going to really inform the process moving forward. And so your feedback is really critical on these different proposed changes. And if something is confusing to you, that's really critical for us to know too, so that we can inform future discussions. And I'll actually share with all of you that you're part of you are the first presentation we're giving. And so your feedback is doubly valuable. And if you want to share feedback after this presentation on things that worked, or maybe that you would want to see changed for other people who will receive it, we really do welcome that feedback as well. And so today's conversation, just to give you an overview of what this will look like, we're going to share background information about Washington State's taxes. Then we're going to give you an overview and go through a 9-part survey, one question at a time, for you to be able to give feedback. And I think a lot of the work that specifically focuses on businesses really begins with around question 5 in this survey. And then after that, we're going to do a wrap up and discuss next steps. And so just a few ground rules before we get started. I know this is a small group, which I think really leads to very meaningful discussions. There are no wrong answers. I just really want to reiterate that. We encourage you to speak up, and you can do that either by entering questions or comments in the chat. You can also raise your physical hand or your hand icon, and there'll be built-in moments for us to take questions and comments. And we just ask too that as you speak up, that we also request you hold space for others so they can also express their opinions. I think this is particularly true if those opinions are different from yours. And from our perspective, the broader the discussion, the greater our understanding. So to kind of begin this interactive process, I kind of want to just open this up to all of you, and you can type your answer in the chat. What is one word or phrase that comes to mind when you hear the word tax? So you can type your answers in the chat if you would like. I'm hearing from Rodney Proctor, oh my God. And I think, you know, one of the reasons we wanted to start off with this question is just really to emphasize that there is no wrong answer here, right? And that all the perspectives you're bringing are really critical to us. I'm seeing confusion, infrastructure, government, infrastructure. Yeah, funding for roads and bridges. Thank you for all of your answers. I really appreciate it. And so you might be wondering too, like who the tax structure working group is. And so before we really dive in, I do want to take a moment for us to give you a sense of who is behind this. It is a group of policymakers. And I'm going to share a video with you that dives in a little more into who and what the tax structure work group is.
So what is the Tax Structure Work Group anyway? The Tax Structure Work Group is a collection of policymakers working together to develop recommendations for making Washington's state tax structure more equitable, more fair, stable, adequate, and transparent. The group isn't looking to increase or decrease the total amount of tax money collected by the state. It's just looking at the combinations of tax types that could generate the same amount of tax money. The group is only investigating different types of taxes with the goal of improving Washington's tax structure, not a change in overall tax revenue. There are a whole lot of different taxes like city, county, special district, tribal, and even federal, but this group is charged with only looking at Washington's state taxes. So who's in the Tax Structure Work Group? The Tax Structure Work Group is made up of Washington state legislators, both Democrats and Republicans, along with representatives from the Governor's Office, Department of Revenue, the Association of Washington Cities, and the Washington State Association of Counties. The Tax Structure Work Group wants to hear from you to understand your priorities when it comes to taxes. Take a moment and let your voice be heard. Take the survey and tell the Tax Structure Work Group how to improve state taxes.
Right. And so that now that we've covered that introduction, I also kind of want to touch base on where we are in this process. There was quite a bit of economic research that happened in 2020. And now in 2021, our focus is on you. Our focus is on community and business engagement. And so your feedback that we're gathering in this meeting and in meetings with other groups is going to help inform future policy decisions. The feedback is going to be collected into a report that will go to the legislature and inform policy discussions in 2022 that then could inform legislation in 2023. And so another interactive question for you, what type of taxes do you currently pay? I have a hard to keep track. Yeah. Thank you for sharing that. Personal, business, yeah. Sales, property, income. Yeah, so I'm seeing a broad array here, right? And I think the hard to keep track also is going to kind of inform part of the reason that we're really looking to restructure Washington state's taxes, and we'll get into that a little more. So if we look at the makeup of Washington state's taxes in 2020, what you're going to notice is the biggest source of budget for our government is coming from the general sales tax. So 45% of the budget's coming from general sales tax. And then the next big taxes are the business and occupation tax, the B&O tax, property taxes, and then selective sales. There are other taxes as well. And so this is a list of some of the major state taxes that people and businesses pay in Washington. And it's important to note today that there are additional local taxes that we won't be discussing really. And we're really going to be focusing on taxes today that contribute to the government's general fund. And so this is the part of their budget that goes to general public services. And so while the gas tax is up on here, we won't actually be discussing it because that goes specifically to transportation funding. And so the three big taxes that we are looking at is, first of all, property taxes. So the taxes that homeowners and property owners are paying that many of you mentioned in the chat. The next one is the general sales and use tax, the taxes we're paying when we buy goods such as clothes and furniture, or services such as parking, restaurants, or tattooing. And then finally, the business and occupation tax. And these are the taxes that a business is paying on the total amount of money that they make before subtracting most costs. And that is really different from models where taxes are based on profits or other measures. And so we'll be getting into some more details on alternates to this in the presentation today. And one of you mentioned that it's hard to keep track of taxes. And that is one of the reasons that the tax structure working group was formed, because Washington state's taxes could be more fair, stable, transparent, and adequate. And so I'm going to be turning to an audio of a forthcoming video. This is the joy of being the first group to do this presentation. And so if you're interested in seeing the videos, those will be up soon.
The Tax Structure Workgroup is exploring changes to Washington state tax structure. This workgroup is asking, is our state tax system equitable and fair? Is it stable? Is it adequate? Is it transparent? But what do those terms really mean? Let's break it down. First, fairness. A fair or equitable tax system is one that is fair to people and to businesses. A fair tax structure must consider different viewpoints of fairness. One view of fairness is that those individuals and businesses with higher incomes or revenue should pay a higher percentage of their income or revenue in taxes, and those with lower incomes or revenue should pay a lesser percentage through graduated or progressive rates, targeted tax credits, or exemptions. This view of fairness considers the capacity of a taxpayer to pay the tax. Another view of fairness is that all individual and business taxpayers should pay the same percent of their income or revenue in taxes, regardless of their income, through flat taxes or the same tax rate applied to all individuals and the same rates for all businesses. This view of fairness considers the consistency of the tax structure. The Tax Structure Workgroup is considering changes to the tax system that would create a balance of these different views of fairness. Next is stability. That means the tax system provides a reliable amount of money even with ups and downs in the economy. Transparency means that taxpayers know when to pay taxes, the amount they need to pay, and how to make those payments. And adequacy. The tax system needs to collect enough tax revenue to pay for established public services. The Tax Structure Workgroup wants to hear from you to understand your priorities when it comes to taxes. Take a moment to complete the survey. Tell the Tax Structure Workgroup how to improve the state's taxes.
And so here I'm going to pause and also stop sharing my screen so that we have room for questions and can also see each other's faces more easily. So before we dive more fully into the survey, we just want to pause to see if there's any questions about the tax structure work group or the background information that you were presented with. All right, I'm not seeing, oh yes, please go ahead.
I just wanted to say that way back in the day when Senator Marilyn Chase was in the Senate, she had said that, you know, just our tax structure was so regressive in so many ways. And so, but I knew kind of what that meant, but, you know, you don't have to go into detail here, but, you know, my hope is that you go into real specific strategies that are going to equalize or make more fair how the tax structure is implemented, and that's what I'm most interested in, because our partners work with companies with 5 or fewer employees, and they're really on the edge of our economy and need support. So I'm interested in that particular aspect. And I don't know, Rodney, looks like you have a question. You are muted.
There we go. There am I. I didn't have a question, but if we're making statements, I can tell you one of the fundamental problems I have with not just Washington State, but the federal government and across our taxing is that we tax income, we don't tax wealth. And that's why we have this great gap between people that the have-nots and the haves, is because the haves are not paying money on their wealth, they're paying money on income. And that affects low-income people much more than higher income people. That's why we can't gain anything. Anyway, that's my view.
Thank you,
Yeah.
Rodney.
Yeah, and I just want to also thank both of you for speaking. This is exactly the type of feedback that we're really looking for. And so I do want to again emphasize that comments and not only questions are welcome here. So thank you both for that. I'm gonna just pause here and see, Lisa, would it be helpful to turn to our expert colleagues to talk a little about what the term regressive means, or should we?
Yeah, I mean, I'm familiar with it, but I think it would be helpful. And I know that Angela put a comment in the chat, and I don't know if Angela, you want to share, or if I can just read it, either way.
Yeah, Lisa, you're welcome to read Angela's comment. Thank you for offering that.
Yeah, so currently the tax structure is not something people understand. It's too complicated, not accessible information that provides context in a friendly way. As Lisa is referring to right now, regressive, how can anyone trust what the Washington government is doing when it doesn't change?
Yeah, thank you for sharing that comment, Angela. I really appreciate that. And we have a note taker here today. So these comments are being collected and in a way that respects your identity. It is anonymous.
Great.
So
and
Morgan,
did you want to add anything else, Angela? Thank you for.
Of course.
I was just frantically typing, but I'll speak instead. The most vulnerable don't have power, status, or rank to be able to input on this process in the first place, but they're the most impacted. Of course, we all know that. And then move up from there to folks that are on the verge of being the most vulnerable, and then middle class. So when that, again, back to the point of when that bottom line of the fact of our tax structure currently being so regressive, and what I don't remember what Washington State, where we rank, but I think we're pretty high up on that list. If nothing can happen to change that, then what hope is there? So you lose hope, you have no power, you just keep scrambling. So those of us who are working with the most vulnerable and for serving the most vulnerable, you know, are not, we don't have power either. We don't have time to build power. And I'm not a policy wonk, but I would like to be. That's why I'm here today.
Yeah, thank you, Angela. I really appreciate the points you're raising. And I think to make sure that we have like a shared common language, before we keep going, I'm going to turn to Morgan to give us a definition of regressive, because I think that touches on a lot of the points that are being raised right now.
Yeah, sure. Thank you, Vivian. And I'll say the tax structure work group has these issues of fairness front and center. In that video, I think you heard them sort of reference this idea around capacity, right? That there's somehow the ability to pay should be a factor that one takes into account in designing the overall tax structure. And so with respect to issues of progressivity or regressivity, right, particularly regressivity, is that poor households are paying a larger share of their income in taxes than higher income households. And so that is something that the tax structure work group has addressed both in their comments. And then as you'll see, as we work through some of these example ideas that they would like some feedback on, have implemented as possible ways and ideas that the tax structure might change in response to issues around regressivity. So all to say, let's kind of move forward, Vivian. Hopefully that's a helpful explanation for folks.
Great.
Thank you so much, Morgan.
There's also another comment, Brandon, I don't know if you wanted to share it or I can read it either way, another comment in the chat.
Yeah, Lisa, you're
it's a
welcome.
good one.
Yeah. Oh, okay.
Yeah,
You know
okay,
what?
so yeah.
Yeah.
In some way, I would like it to come across what the taxes go on to fund. Some of the confusion about taxes comes from the perception that the money comes out of an individual's pocket and disappears.
Yeah, and thank you for finding a way to share that comment. I appreciate that. I'm gonna get us more into the survey now. We're gonna transition to start looking at some details. And so I'm gonna, again, share my screen here. And on this screen, you're gonna see a link to the survey that I've been discussing. And so what you can do is a colleague of mine has put a link to that survey in there. We also have an email address in here. So if you have feedback on this presentation or anything else, you can send it to this email here. And absolutely, the survey is something that you can share out to other folks. We really actually encourage you to do that. And so the first question we're going to look at is, within that video and beforehand, we introduced that there were 4 reasons that you might want to restructure Washington State's taxes. And so the first question asks you to rank them, where 1 is the most important and 4 is the least important. I'm going to give folks a few moments to open that survey. I know sometimes you might want to do it on your phone. That way you don't necessarily have to toggle between devices. You can also do it on computers, and I will periodically stop sharing the screen so that we can really pause and discuss things. And so I'm actually going to move forward and also introduce the second question before we pause and have discussion and time to fill out the survey questions. So the second question we're going to look at kind of gets and dives in more deeply to the idea of fairness. And so there are 2 statements I'm going to read out to you that would describe 2 approaches to fairness. And the first is as follows. There is a definition of fairness that prioritizes capacity, that individuals in businesses with higher incomes or revenues would pay a higher percentage of tax, and those with lower incomes or revenue would pay a lesser percentage of tax. Now, the second definition of fairness prioritizes consistency. And this definition of fairness is that individuals or businesses should pay the same percent of their income or revenue in taxes regardless of their income. You can also, when you look at this question, say, I'm not sure. And with all of these, we really encourage you in a few words to state why you selected the answer you did, because that, again, just provides us with more information and feedback as we are considering next steps. And so with that, I'm again going to pause here so that we can take questions and comments. I'm going to stop sharing my screen so that we can all see each other. And during this discussion, I encourage you to kind of open that survey, and you can even take that survey as we're doing this presentation today.
Quick question. So do you want us to answer that question right now while we're doing the survey, or is that in the survey?
It is in the survey. And so
it is in the survey?
On not being more clear with the directions, that's on me. So right now, you can take the survey as we're doing this presentation, and I encourage you to do that. Okay. Know that you can go back and change your answers or finish it if you don't quite have time. So yeah, you can open that survey right now and use it to follow along with this presentation.
Okay.
And are you also asking for feedback from the group on the survey as we speak right now?
Yeah, so I realize I still haven't given clear directions. Thank you, Lisa. So let me.
It's okay, no worries.
Yeah, so everybody, I would say if you have the ability right now, open the survey and take the survey while we do the presentation. And know that you can go back later to change your answers Or if you don't have the ability to open that survey right now, you can take it on your own time after the presentation. Yeah. Thank you for making sure that I'm being clear. I appreciate that. So yeah, so I kind of want to pause and bring us back to that idea of prioritizing the different reasons one would restructure the taxes, and also the two definitions and approaches to fairness that you heard. And so if you have any questions or comments on the first two questions in the survey, I really welcome you and invite you to either enter that in the chat or to raise your hand and we can discuss that.
Okay, I don't like vacuums, so if nobody else will talk, I sure will. And again, I would go for number A because it's the closer one to tax and wealth, which again, I think is the real issue. It's not income, it's wealth. Income is going flat or down, and which hurts moderate income and low income people. We're not making any more money, and we're getting taxed at either the same rate or higher. Whereas where wealth is grown is in the stock market and stuff. That's not where average people or money is. Okay, their retirement fund may be in there if they're lucky enough to have a retirement, like the teachers union and stuff like that. Their pension may be in there, but their individual money is coming from their income. So I truly believe that's why we having this growing gap between the haves and have-nots in this country.
Mm. Thank you, Rodney. And Lisa, I see that your hand is up.
Yeah, I'm curious if, to what extent our current tax structure does tax percentage-wise, where everybody gets the same percentage. Is that current right now?
I'm going to turn to Morgan, our tax expert, to answer that question.
So Lisa, I think your question was, are people currently being taxed the same rates, right? And that's really a notion of consistency. And I would say kind of, and it depends. So like the sales tax, right? Everyone is paying, at least on the state portion, right? 6.5%. If you're buying that same bottle of Coke, it doesn't matter what your income is, you're paying that rate. But then you have things like the B&O, which within business classes, everyone is paying the same rate, but between different business classes, people may pay different rates. So the property tax as a constitutional element to it, that everyone has to be taxed at the same rate. So in terms of property taxation, everyone is paying the same rate, but but how much you pay depends on how valuable your home is. So all you can see is like, we have elements of consistency within our tax code already, but they are sort of lots of areas of gray that then kind of start blending to this area of like this notion of capacity that the tax structure had, right? So even though you're having the same rate, but if your home is valued the same more, you pay more taxes. So just to give you a little sense of the complexity and the sort of depends portion of that question.
Super, super helpful. Thank you.
Thank you both. And I'm going to go back to sharing my screen. And so the next question in the survey starts to look at the concept of adequacy. And so again, this is just making sure that the tax system is actually collecting enough tax revenue to pay for established public services. And so it's worth pausing here to actually talk a little about the current tax structure. And to do that, we're going to focus on the property tax, which Morgan just touched on. And so by law, the state property tax is limited to growing by 1% each year. And so it can't grow any more than 1%. However, you might see your actual property taxes go up for other reasons because there are local taxes to provide funding for fire services, for education. Cities and other governments will tax property as well. And so the first scenario, the first proposed change is to actually change how the state property tax can increase. And so under this proposed scenario, under question 3, what this would look like is that rather than be limited by 1%, that number of change would actually be based on population growth and inflation, or the cost of goods and services. And so again, I'm going to pause here to see if there's any questions about this scenario that is covered in question 3. And I'll give it a few more seconds. And it's okay if you don't have any questions or comments too, but I want to make sure that, yeah, thank you.
So I do appreciate the process you're taking us through and being able to look at the survey and then talk about it as we go forward. I really do. But the thing that is, I'm not going to do an answer. I'm going to walk through and then we'll go back and start over and do it on my own time. But
yeah,
my comment is, if the system is broken in the first place and there's no attention, resources, thinking going into how the structure is communicated, and that doesn't, if that is left for the end of all of this, I just feel like getting more, what am I trying to say? Getting more buy-in, like you're trying to do right today, right? This is a process, and this is a committee is formed, and you know, there are some big things to move in order to get to a place, but you need to have those metrics of coming from community and voice that says, yeah, we want you to do this. Yeah, we're with you. So I keep coming back to the same thing of, well, if I don't, you know, if I don't trust in the first place that, you know, adequacy to me is, how can I believe that any of this, yeah, there's a lot of taxes that I'm paying, that we're all paying, but how can I believe there's going to be adequacy at any point if I don't understand that and believe that those basic intentional changes are going to be made, and that's about the communication. Hopefully that made sense.
Yeah, and to just kind of, I'm in listening mode right now, and so what I'm hearing right now is that within this, beyond just the technical aspects of the taxes, is how we're communicating it to the public, how we're seeking buy-in. And just to ask a follow-up question, are there particular types of information that you would want to see communicated?
I know that I just sent out an email to a big group that I'm supposed to be at another meeting right now with, and I said, you know, do this survey, let's build voice. And that's just that's one network. But people have to be convinced that something's going to actually change. So what is that narrative? Intentional work around what that communication looks like, first of all, and how it's distributed. That's just, I just feel like that is so undervalued, that piece.
Yeah.
Did I answer your question?
It does, yeah. And I really appreciate your bringing up that factor. I'm going to just note that we have about 22 minutes left. And so I want us to at least touch on some of the scenarios together beyond this one that dealt with adequacy in the property tax. And this one actually touches on a topic that came up earlier from this group. So the next scenarios that we're going to look at together are really looking at updating the property tax and taxing personal wealth. And so again, I'm going to turn to an audio here that talks a little about some of the approaches that could be taken to improve this tax structure.
Under the current tax system, low-income and middle-income people pay a smaller amount of tax but a larger portion of their total income in taxes than higher-income people do. Higher-income people pay a larger amount of tax but a smaller portion of their total income in taxes than low-income and middle-income people. The Tax Structure Workgroup is discussing how to balance the capacity of an individual or business to pay tax and the consistency in the taxes that they pay. For example, the Tax Structure Workgroup is looking at ways to make Washington's state taxes fairer for people who live here by considering reductions to the property tax and sales tax and replacing this with alternatives like a wealth tax or income tax. People in Washington state already pay property taxes and sales taxes. As you know, property taxes are taxes on property, like a house or condo. Sales taxes are taxes on things people buy in stores or online. The work group is exploring a wealth tax, which would be a tax on financial property like stocks or bonds over $1 billion. The work group is also learning more about a personal income tax and a corporate income tax. A personal income tax would be a tax on the income people earn. A corporate income tax would be a tax on a business income after subtracting expenses and other costs. Remember, the group isn't looking to increase or decrease the total amount of tax money collected by the state, just looking at combinations of tax types that could generate the same amount of tax money. The group is only investigating different types of taxes with the goal of improving Washington's tax structure, not a change in overall tax revenue. The Tax Structure Workgroup wants to hear from you to understand your priorities when it comes to taxes.
So I'm going to cut them off a bit and keep us moving because I think you heard that little end bit before. And I think, one thing that I just want to emphasize again is the next series of questions really is looking at fairness. And so we're going to be looking again at both the ideas of capacity and consistency that you saw in the second question. And so if we're looking again at the current tax structure, we have that property tax that has the limit factor on it and then additional local taxes. And in this scenario, what would be introduced is a tax on immense wealth. And so there would be a 1% tax on financial property with the first $1 billion exempt, which means that if you have $1 billion, you would pay a wealth tax. And then that would allow for exemptions of $250,000 of a person's primary residence, and that would not be taxed. And so the questions within the survey that are related to this are asking if you believe that reducing property taxes paid by most homeowners and making up for the difference by taxing financial wealth over $1 billion creates a fairer system. And then a related question is whether adding financial property, such as stocks and bonds, over $1 billion as a type of property, so really looking at the definition of property within the state, does that create a more consistent system? And so again, I'm gonna pause here and see if there are any questions related to this or comments. All right, and I'm gonna move now into some tax structure proposals. Oh, yeah, thank you for the comments coming in. I see comments around the $1 billion figure, whether that is too high, and whether or not this PowerPoint presentation can be publicly available. Oh yeah, Sherry, yes, this will be publicly available, so you can look at this on your own time.
Yeah, and we're going to be publishing it on our website. And so we'll announce it to those who registered as well as to our whole network, just to make sure that's clear. There was also a comment from Brandon about taxes being tied to inflation.
Yeah, thank you, Brandon, for participating and entering those into the chat. We're taking careful note of it. What I'm going to do next is transition us into proposals that are really looking at the business and occupation tax, which I think will be of particular interest. And so I'm going to share my screen again. And so the next series of questions we're going to be looking at are intended to improve the fairness of Washington's tax structure by changing the B&O tax. And the first approach to this is introducing a value added, or VAT, and a employer compensation tax. And again, there is an audio that I'm going to share with you on this.
Right now, all businesses in Washington pay a business and occupation tax, or B&O tax. That tax is based on the total amount of income the business receives, regardless of the amount of profit the business actually makes. The amount of profit that different businesses make at the end of the day after paying all their expenses can vary greatly, even within the same type of business. Think about the difference between a small family-owned store versus a large big box store. That means that the B&O tax can be tough on small businesses, startup businesses, and businesses with small profit margins. The Tax Structure Workgroup is considering alternatives to the B&O tax that would tax a business's total profit rather than the total income a business takes in. There are a few alternatives that the workgroup is exploring, and let's take them one by one. A value-added tax is a tax on the difference between the value of a business's sales and how much it costs them to create their products. For example, if this lemonade stand sold lemonade for $3, but it only cost $1 to make, then the lemonade stand owner would pay taxes on that $2 difference. An employer compensation tax is a tax that a business would pay on total employee compensation, meaning salary, commission, and bonuses, that's greater than $150,000 per year. This would only apply to businesses with annual worldwide compensation payments to employees totaling more than $7 million. A corporate income tax is a tax based on how much income a business made after expenses. This tax could be flat, meaning all business income would be taxed at the same flat rate, or progressive, meaning as their income increased, their tax rate would also increase. Lastly, a margins tax. That allows a business to subtract certain expenses from the total amount of money it makes and then pay tax on that remaining amount. The work group is exploring all these different types of taxes: the B&O tax, value-added tax, employer compensation tax, corporate income tax, and margins tax. And like all good conversations, it begins by listening to business owners like you. Help the Tax Structure Work Group understand your business's priorities when it comes to taxes. Speak up, take the survey, and tell the Tax Structure Work Group how to improve the state's taxes.
And so again, we're really thinking about, for both the upcoming questions 5 and 6, we're looking at trying to create a consistent approach for taxing businesses and also considering the capacity of businesses to pay the tax. And so the business and occupation tax, again, is really based on the total dollars coming into a business, regardless of profits or expenses. And in contrast, if we look at that value added tax, or VAT, it's looking on the value that a business is adding to what it's producing. And so in this case, in the survey, you'll see there is Jane, the laptop manufacturer. And so if the cost of all her parts is $500 or $400 to make a $500 laptop, then her value added for a given laptop would be $100. And so in this scenario, if she has a business that is $1.1 million, if this was the B&O tax, she would be taxed on the total of $1.1 billion or $1 million. Dear me. So she would be taxed on $1.1 million. And then under the VAT, she would be taxed on this lighter blue color, the $220,000 amount. And so it is important to pause here and note that this means that if we were looking at a more generalized case with no numbers, the B&O tax has a lower rate but then the VAT would have a higher rate on a lesser amount. And so the precise amount of money that a business might be paying on those two rates would really depend on that business. And further information will be posted on the website to give more details on that. And so again, in this scenario, there is another element that I want to introduce here, which is that when the B&O tax would be replaced with a VAT, there's a proposal to also introduce an employer compensation tax. And this employer compensation tax would actually only apply to businesses who have a revenue of $7 million or more, and it would only be based on the incomes and compensation, I should say, greater than $150,000 per year that employees receive. And so by introducing this, the rate at which the VAT for all businesses would be taxed would be able to be lowered. And so when we look at questions 5A and 5B, what this asks is, when we think back to Jane the laptop maker and her $100 of VAT, would it taxing that $100 of value added be fairer than taxing the $500 that the laptop maker sold it for? And then does reducing the VAT paid by all businesses by adding an employer compensation tax paid by a few businesses create a fairer tax system for all? And again, I'm just wanting to note that that is again applying to companies who have a payroll of more than $7 million a year, and that that tax only applies to employee compensation of over $150,000 per employee. Now, I'm gonna do something a little bit different here. Because question 5 and 6 are fairly similar, I'm gonna go through question 6 before we pause for discussion. So I thank you for your flexibility. The other approach to improving fairness and trying to restructure the B&O tax would be to replace it with a margins tax and that same employer compensation tax. Again, this is dealing with consistency and capacity. This slide is reviewing the current system, the B&O tax. And so the scenario in question 6, rather than the VAT being the replacement for the B&O tax, here it's the margins tax. And so the margins tax approach is to allow a business to deduct certain expenses. This might be the cost of goods sold, wages, 30% of revenue, from its gross revenue, and only pay the tax on the remaining amount of income. And so if we considered a company called Acme Home Goods that had a $1.6 million revenue within our state, of that $1.6 million, if the company's costs of goods sold came to $900,000, under the margins tax, they could deduct that $900,000 and the company would be taxed on the remaining $700,000. Similar to the VAT, the rate at which you would be taxing the smaller amount would need to be higher. And this again is related to the fact that the tax structure working group is trying to be revenue neutral and keep the amount of budget that the state generates constant. And so the questions in 6A and 6B are similar to 5A and B. The first one is, would taxing the $700,000 in the margin tax be more fair than taxing the full 1.6 million? And then the second part of this would be, do you think it creates a fairer system for all businesses to reduce that margins tax paid by all businesses by offsetting the reduction with an employee compensation tax paid by a few businesses? And now I will pause for questions and comments.
I see we have a question from Brandon in the chat, Vivian.
Thank you, Pauline. And Brandon, I remember you mentioning that your mic may not be working. I can read out the question here. I guess the question I have, looking at the layout of these taxes, is what is a business incentivized to do in any case? Invest more in their company, pay their employees more or less, offshore, reshore, etc. I'm going to turn to Morgan to answer this question.
Brandon, I think that's a great question. I don't think I have an off the top of my head answer to a very good question. I would say we're going to note that feedback, and I think it's fantastic. It's like exactly the kind of feedback I think folks are looking for on the state legislature. Really, is these kinds of insights. So appreciate the note.
So I am wanting just to make sure I understand your question here. Is it if first of all, they are similar, questions 5 and 6, but they're both really complex.
Yeah.
And are you with the employee compensation, that 150,000 component, that tax, would that apply for both question 5 and question 6, or would that just be applied to question 5 to offset
Right.
or to complement the amount of tax revenue coming in?
Yeah, Lisa, that tax would offset it in both scenarios.
Okay.
If you'd like some more detail on that, Morgan can help unpack any technical questions that folks have.
Yeah, that would just be helpful at some point.
Yeah.
I'll go real quick here because I know we're going to be bumping up against time. But I think the tax structure work group has heard from many different parties over the years that the B&O is inherently unfair because it looks at gross income. Obviously, through different tax preferences, right? That basis can get lowered for different industries. But in these cases, they want to say, well, could we kind of circumvent that by just creating some alternatives to the state's chief business tax, right? By looking at a value add tax, looking at a margins tax as kind of similar but different types of replacements. Both of those things, they would say, well, we could potentially pair that with this employer compensation tax. So what the effect of that would be is that the VAT or margins tax rates would be lower than they would otherwise because you have this other tax making up some component of the revenue that is replacing the B&O revenue currently. So that's just a little bit about sort of the genesis of how those two scenarios are constructed.
That makes sense. Thank you.
And Angela, I saw that you were coming off mute, and I just want to pause to see if you also wanted to ask questions or add in any comments.
I really only have a question about the survey itself. I can put it in chat, not about the question, but the survey. It's just basically 51 questions is intense and complex information. So working with community, I know that I keep it short. And so I'm wondering is there an A, B, C, or an A and a B where questions are grouped and prioritized in, and if somebody is really committed, they go to B, just had to throw it out there.
Yeah, Angela, thank you for that feedback on the survey itself. Pauline or Morgan, would you want to touch on that question now or in the chat?
I'll go really quickly. Yes, we tried to narrow this down as much as possible. I think obviously the legislature wants to hear from you as much as we can on these issues. The survey, I think 51 seems like a lot, but about half of those are really kind of more just demographic questions where they kind of want to know where you are, if you own a business, what you're, and those types of questions. The meat of it is really kind of the feedback on the specific scenarios. So I would say it is more than 5 minutes, but less than 15 to kind of work your way through the survey with the hardest stuff up front. So knowing if you can kind of get feedback on the first 6 scenarios and issue and the values and the key principles that the tax structure work group was looking at, the back end of it moves pretty quickly, since it's really just nothing personally identifiable, but they do want to know kind of like how are folks who have higher incomes responding relative to people who may have lower incomes, or how are people responding on the west side of the mountains versus the east side of the mountains, right? Those are kinds of things that they're interested in. But we're continue to kind of work on the survey, because I understand survey response burden fatigue is a real thing, and we want people to answer the questions. So appreciate anything you have specifically if you do this, Angela, and can say, hey, I had real problems with 5, 6, and 7, and giving us that feedback. Thank you for being our sort of our first test run through all this stuff. We've done some testing and we understand these things, so appreciate it.
Yeah, and I appreciate the additional comments on being upfront about the time it takes in the chat. I'm going to do a quick time check because we are exactly at 3 p.m. And I think I can either go directly to wrap up and next steps. Depending on if people can stay an additional 5 minutes, I can cover the remaining scenarios if that would be valuable. And at the same time, I really want to respect all of your time today. So I'm going to just pause to see what people would prefer to do.
We definitely have this time until 3:30. So if it sounds like Brandon can stay, and so can Devi and maybe Angela. So I would encourage you to complete.
All right, then I'm going to dive into the next scenarios. And what's really important to note about these scenarios is they're going to be dealing with the idea of stability. So we can think about our current tax structure in this way, right? There's those 3 major taxes that really form most of our revenue for our state budget: the B&O tax, which we were just discussing, the sales tax, and the property tax. And so both 7 and 8 are similar to one another. They're going to be looking at scenarios that do the following. They will be taking this B&O tax and eliminating it. They will lower the sales tax, the state sales tax, and they'll also lower the state property tax. To do that, however, they're going to do something else at the same time, which is they would introduce a personal income tax and a corporate income tax. The 2 questions and scenarios take different approaches to doing this. So in question 7, what you're going to see is that all taxpayers would pay the same rate of tax on their income and revenue. So when you look at that scenario, the personal income and the business or corporate income would be flat taxes. When you look at question 8, it would be a progressive tax structure. And so in this one, the tax rate would be lower for lower income taxpayers and higher for higher income taxpayers. I mentioned that this relates to stability, and the goal of introducing these 2 different taxes and then lowering the others is to broaden the tax base. And when a tax structure has more sources of revenue, when the economy goes up and down, the state budget is less likely to go up and down with short-term changes in the economy. And so I'm going to pass on this slide and keep going into those specific scenarios, really the meat of the presentation. And I'm going to go through both 7 and 8 before we pause. So if we looked at the bar graph version of what we were just discussing with those icons, it would look a little like this. On the left, you have our current tax structure, and on the right is a tax structure that would rely more on personal income. And then there would be corporate income tax, sales tax, property tax. And so the first question that you're going to see in 7, and again, 7 is relating to that flat tax, the same rate for everybody. Would taxing businesses based on their net income be fairer than taxing them on all revenue that they took in? And then the next part asks if taxing individuals' income and reducing sales and property taxes would be fairer than taxing their spending on retail goods and services and the value of their home. And then the third part of this question is, overall, do you support this scenario's approach to replacing the B&O tax, reducing the sales and property tax, and adding a flat corporate income tax and a flat personal income tax? And for some comparison, before we go into our discussion, I'm going to again go straight into question 8. And so question 8, again, is using a very similar structure, and the only difference is that rather than using a flat tax rate, it uses a progressive tax rate. And so when we look at those same questions, again, you're going to see that question of, would taxing businesses progressively based on their net income be fairer than taxing them on all the revenue they took in? And would taxing people progressively based on their income and reducing sales and property tax be fairer than only taxing their spending on retail goods and services or the value of their home? And then again, the third part of this is very similar to the last one, which is, overall, do you support this scenario's approach of replacing the B&O tax, reducing the sales and property taxes, adding a progressive corporate income tax, and a progressive personal income tax? And thank you, because I know we went very rapidly through that section. And so I'm going to pause here. The last question, 9, really asks if you have any other feedback. And there's an additional question that actually will ask you to rank the different options. And so I'm going to stop here so that we can discuss the 2 scenarios where you're broadening the tax base to increase stability. And I see
Jonathan S. Tucker joined us.
Yeah, welcome. It's nice to meet you. And I see that we have a question from Brandon, which I'll read out for everyone. Does broadening the tax base in those ways reduce the ability for the state to respond to market signals? Although it's responsible for creating the market in some ways and doesn't need to necessarily respond to the market in the same way a business does. I'm going to turn to Morgan to kind of speak a little more on how broadening the tax base and stability in the market are related.
Yeah, that's a great question, Brandon. I think I understand it correctly, and I don't have an easy answer for it, but we'll note your feedback just like your last one. But back to Vivian's point, as a general principle, I think most sort of tax policy wonks think of a fairly broad tax base with low rates as being the one that is the most efficient and also could be the most stable over time, but it depends on the makeup of the taxes. And so as we kind of move forward, the tax structure work group will be kind of considering that notion around sort of this the broad, how broad and how it may sort of be more or less efficient with sort of the economy. So I don't have any specific answer outside of that, but I think your comment and question is right on par with a lot of thinking, and thank you for bringing it up, and we'll be cataloging that for feedback to the group.
And I just want to allow a few seconds before we move forward. If there are other questions or comments on the scenarios you saw in 7 and 8, whether it's on broadening it, whether it's on a flat versus a progressive tax, we really do welcome your feedback.
Yeah, and Jonathan S., I will also, or maybe one of you can send her the link to the actual questionnaire. What we've been invited to do is walk through the questionnaire while these presenters kind of share insight on ways of thinking about it and understanding each question. And so, I'm pretty darn good, and I'm a little bit overwhelmed by those last 3 questions, and I want to I just want to better understand the questions so that my answers are, or the answers that the folks that I send this to will be more informed. Angela, I don't know if you were going to jump in there.
I was going to ask if you could, to Lisa's point, if you could give us an example of 7 and 8 using a business, a structure.
Yeah, so kind of in the way that 5 and 6 had an example. I just want to check that I understand the question. You're interested in seeing a real world example for 7 and 8. And I also just want to mention, I'm going to turn to Morgan, our tax expert, that if you're overwhelmed by a question, that's also really critical for us to know, and for us to know what type of information will help you. And so I'm going to turn to Morgan now.
Yeah, thanks. I'll do my best, Angela. So and I don't have the specifics off the top of my head, but in terms of the personal income tax, the difference between a scenario with the flat tax and the scenario with the progressive tax is really about the structure of the personal income tax. So for example, let's say there's a household making $50,000 a year, and after taking the deductions they would have, their taxable income is somewhere around $35,000. So in a flat tax scenario, that $35,000 would be taxed at, say, 3%, right? In order to do the replacements. And so 3% of that 3,500 is roughly, what is that? Roughly $350-ish or so, we'll call it. That's not quite right, less than that. But all to say is that's how it works in a flat tax. But in the progressive tax, it works much like it does in the federal income tax, which will be a series of marginal rates. So for the income earned, say from $0 to $10,000, it would be taxed at a very low rate, say like 1%. Then the income taxed at, say, 10,000 to 30,000, it's taxed at a slightly higher rate, say 2%. And then say the income earned from 30,000 to 70,000, it's at 3%, right? And then income earned above that, it's at 5 to 6% perhaps, right? So in a progressive structure, for every dollar earned at a higher rate, a higher proportion of that dollar is taxed at a higher level. So the end result of that is the effective rate for that 35,000, that household that is making $50,000 is going to be much lower in a progressive structure than it is in a flat structure. So this goes back to your question, or I think maybe Lisa's initial sort of question around these issues of regressivity and the effect of that. So I would say the scenario with progressive taxation, right, is saying what could we do here to respond to that, right? One, we could lower the reliance on the sales tax, which is the sort of chief contributor to the issue of regressivity within Washington's tax structure, and replace it with an income tax that is progressive. So those that are kind of moving that burden away from the consumption related to the retail sales portion, and you're moving into income, but you're also doing it in a way that people with higher incomes are paying a larger share of the taxes than people at lower incomes. So hopefully that's a long explanation to a very complicated set of ideas, but that's kind of what's happening. With that example of how does it differ between a flat rate versus a progressive rate?
Thank you. That was a robust answer.
Yeah. And I'm gonna just do some wrap up right now for us, and then I'll again pause at the very end in case there's additional comments or questions that this group has. And I really want to thank you too for going past the hour. So the last section that I'm just going to mention is that after you're asked to rank the different types of taxes you've heard today, there are some demographic questions that are optional. And we really encourage you to fill these out, because it really helps us know whether we're accurately getting information from all the different communities in Washington. And if you own a business, you'll be asked some additional quick questions about the makeup of your business. And we do want to emphasize demographic questions are optional. You'll notice that the first demographics question asks, where and how did you take this survey? And so the answer you would want to choose is at a meeting hosted by an organization that I am part of. In terms of next steps, I also just want to pause here and thank everybody. I especially want to thank this group because you are our pilot. And I feel like all of us learned a lot from this session. And so I really want to thank you for your grace and your understanding today, as well as the comments and feedback that you've been providing. And so there are a number of ways to get involved. And in fact, some of these already came up. Share the survey with friends and family. Visit the website. And I know that Lisa will also be sharing the information as it comes up there too. And so thanks, Lisa, for doing that. There's going to be a tax calculator, and this tax calculator will allow you to actually explore some of these individual scenarios in more depth and what they might mean for you. And then throughout this fall, there's going to be virtual town halls, and you can attend these in your region. And so with that, I'm going to end the slideshow and just thank you one more time and pause to see if there are any questions. Pauline, if you could put the email again in the chat. That email, if you have specific feedback on parts of this presentation that worked for you, parts that you would want to see changed, things that maybe felt like they needed more context or explanation, we really do welcome your feedback on that.
So thank you so much for taking the time to meet with us, Vivian and Pauline and Morgan and all of you. It's been such a gift to learn with you about this survey. I appreciate those who attended, those who came a little bit late, and those had to leave early. This is critical information. The legislature took a risk in trying to figure out a way to look at, understand, study, and present valuable options for changing the tax structure so that it could be fairer and more transparent and create enough revenue that we can actually have an economy that works for everybody. And this is hard work, and you are doing a yeoman's job in getting the word out. And we're fortunate and grateful to be a part of that process. So thank you. I want to just give you a round of applause and appreciate your time and energy with us today.
Yeah, and I again want to reflect that gratitude back to all of you. It also takes hard work to set aside time that you could be using for other things, right? It takes time to go through a survey like the one we're presenting with you. And we appreciate that effort and that dedication on your part, as well as the dedication that folks are showing and wanting to share this with other people. And so thank you again for this. And hey, I'm going to turn to Pauline and Morgan to see if there are other additional follow-ups or points that you want to add before we wrap up and leave.
I'll just add that you can find lots of information at taxworkgroup.org, and in the coming days and weeks, we'll be posting more and more background information and other things that will hopefully help folks understand these really complicated concepts better up there. And that's also where the survey lives. And there will also be information about other live opportunities to provide feedback, like some town halls, virtual town halls that we're hosting in the fall. So I encourage you to visit that website. And again, you can email us info@taxworkgroup.org if you have more feedback about the process. We'd love to hear it.
Thank you all. I appreciate this. I know I didn't get to participate as much as I would have liked because I'm a very engaged person, but I tried to get on here as soon as I could. And I didn't know it was at the end, but I definitely will watch the replay and also fill out the survey. So thank you.
Well, and Jenna Finesse is an amazing partner with the SBDC. She's a certified business advisor, smart as a tack, really has a broad and deep understanding of what it takes to help businesses move and what has impeded them from a tax base perspective and every other barrier. So that you're on here, Jennifer Ness, means a lot to me, and I'm glad you're going to review it and also share the word and get the perspectives and this survey out to the folks who really need to answer it. So without further ado, thank you all. I appreciate your time, and we will say goodbye for today.